All right, it's showtime. It's time to go. We got to go. We got to go live now. So, what's up? Hey, what's going on with all of you people? We got a lot of interesting stuff to talk about. What? One of them, fantastic, is Portillos. Portillos, you say? If you've ever been to a Portillos, let us know in the comments off to the side or down below, wherever your field of vision is looking at it. What do you want to talk about? You want to look up a stock? Let us know. Kevin, I think it was Kevin Mendoza. I think you're holding Celanese, ticker CE. A little bit of a bucket of yuck there. And hey, did you work today? Who else worked today? I worked today. So just got home a couple hours ago. Been kind of interesting. I hope you caught the chat I did with. This should show if we keep going higher. Yeah. I don't know what that's in Devil's Coins. Anyway, I hope you caught the chat with Craig. Really enjoyed talking with Mr. I was going to say his last name. I don't think he shares that or has made that public knowledge, but either way, hey, I'm happy to have you. Was responding to comments, had a lot of comments on the video. It's done a little bit well. As I texted him, I was like, hey, that was my second best performing video. So you were in a blue hoodie, right? It was a little bit of intrigue. So created another image, put Craig back in the blue hoodie. Back in the blue hoodie he goes. So I think a lot of people misunderstand SCHD. And I don't know if you guys feel like that. Let me know in the comments right now. Put it in there right the hell right now if you think that SCHD is misunderstood. Had a fun comment, somebody telling me that, oh, what did they say? I just responded to a little bit ago, Kevin. He said something like, you guys got some balls putting your money into this junk, and it's a much bigger risk than Nvidia or Apple, and just something to that effect about SCHD being junk. I'm like, a lot of other people comments about, and it's funny when you have a video do better, you get a lot of newer comments, which is cool. But a lot of people, I think, are misinformed, misunderstanding. Somebody told me that they own SCHD, but it's greatly underperformed JEPI and TFIAX, which is a mutual fund I had never heard of. So for the fun of it, I went ahead and did a comparison, total return comparison. And on both accounts, they said over the last 5 years, those have both outperformed SCHD. I do the total return comparison. SCHD has outperformed both of them. And on a total return basis from his TFIAX, which I'm not familiar with it, it was a 27% better return from SCHD. And just a lot of comments. And I don't know if you guys feel like this, telling people, look, like Craig and I said, it's not meant to outperform the S&P 500. It's a compliment. It's owning a basket of mature dividend-paying companies. And you are going to get anywhere from an 8% to 11, sometimes 12% annualized total return. And it pays a double-digit growing dividend, right? The CAGR over the last 10 and 5 years is about 11, 12%, the dividend growth. That's what you're getting. You're not trying to outperform the S&P 500 or Nvidia or Apple. It's not meant to do that because the underlying is companies, right? Like Home Depot and Chevron and PepsiCo and Nexstar. They're mature companies that are spitting off cash in the form of dividends. So didn't want this to be a rant. And, I'll let me say hello to some people here. But I enjoy it, and that's my problem. Every comment I just want to thoughtfully respond to, and it does take time. In the comments below, I know some of you are just popping in or going to watch this on replay. I highly recommend it. I may have found a stock that sometimes the universe has a way of communicating with you over the past, I don't know, couple months. every time I'm driving around the Chicagoland area and I see a Portillos, especially around lunchtime, Portillos is just slammed. And I was listening to the Acquirers podcast, and I want to shout out the name of the creator. It is Unemployed Value Degen. His name is Stephen Farrington, and he's a small cap value investor. Excuse me, not dividend, but one of the companies that he talked about, and he spent a good 15 minutes or so talking about Portillos, and just said a lot of interesting things. And I'm kind of thinking that I should have. Sorry, my friend Harris from One Penny at a Podcast. One Penny at a Time podcast is texting me. A little bit of football talk going on a Sunday. So we're going to mute that. But I pulled up Portillos because I'm going through the annual report. And I don't know if you're hungry, if you haven't eaten already. I'm going to share this with you. Look at that. Look at the front page of Portillo's annual report. We're not going to go through the annual report, all 96 pages of it, but I'm going to go through with it because I looked at the fundamentals of it several times and I didn't like it. I wanted to like the company. I wanted to buy it. But as Stephen Farrington showed, just look at it. It's just, that's what you get. People love Portillos. I've been around Portillos my whole life. I've met Dick Portillo. I've worked at his house, repaired his garage doors, which he has a lot. But yeah, I've met Dick Portillo. I've been to Portillo's lots. My family loves going there. My friends love going to Portillo's. And it has some really interesting metrics. And I know it doesn't pay a dividend. You know what? I don't care. But I don't know. I'm probably going to go too deep into this now, but it is starting to expand. It has way more stores than it did when Dick Portillo sold it for like $1 billion. And its current market cap is about half that right now. So I'll show you this. Actually, let me show you what turned me off about it. Because remember, I'm not adverse to buying a stock if it's not paying a dividend. But I see you, Chris, with your Eagles. Screw the Eagles, Chris. I got A.J. Brown, and they don't like to throw the ball. They just run, and run it some more. So F your Eagles and F their running. But here we are. This is what kind of turned me off. And I never went deeper than the fundamentals, but Stephen Farrington went way deeper than the fundamentals, and it got me excited about Portillo's. So it's currently $6 a share. It's pretty low. It's a $441 million market cap. And remember, Dick Portillo sold it. I think his group, he didn't get all the $1 billion, but it was sold for $1 billion. So you're getting it for half of what it was sold for. And from what he says, it had 40 some stores and now it's up to 80 some stores. So half the market cap, double the stores. And I think because they're expanding. So this is what turned me off. The negative free cash flow per share. The margins there were compressing. The sales growth was compressing. He said the share dilution, which I'm going to listen to his interview again. He explained why this is not true share dilution, but there's another ownership stake, and they are, I think, just selling shares back to the company, something like that. So it's looking like it to the market, but they're not actually diluting shareholders. So sales are still going up. That's very important. And return on invested capital, free cash flow margin 0. So these can improve. The company's trying to grow nationwide. Net debt, not terrible. And it's got a decent, for them, climbing interest coverage ratio. So just a lot of interesting things. And if this would interest you at all, then I highly recommend listening to the podcast. Again, it's in the description. You can click it on Spotify. So I'm going to be looking into that. And with it only being $6 a share, I may just go ahead and park 100 shares there. What's that? $600? Come on. That's a pretty low risk investment. And fantastically, I think he said, I'll throw the numbers out here, but every Chick-fil-A or Chipotle does say 4, 5, $6 million per location, but Portillos is up to 10, 11, 12 million. Again, I listened on the way home, so these numbers are not concrete, but just very interesting. So that's one thing I'm excited about is Portillos, and it's again a company I know well, a company I've been around my whole life. I see it every time I drive by Portillos during the weekday at lunch, packed. They have two lines, they have people outside taking the orders, and it's just, yeah. What's up? What's up, Mark? I should say hello to more of you people out there. Bernard, Bill, what's going on, Bill? Look, you're on the screen. There's there's your avatar, Bill. I have the power. Kevin, Celanese is actually the reason I sold Celanese was the exact reason why it's down. Why Dow cut the dividend, right? Dow cut the dividend. I hope I remember that right. Lyondell Basel. You have Stepan. All these specialty chemical companies are going through it right now because of the pressure on the chemicals that they don't control. And this is one of the things I didn't like is that when you're in a commodity business like that, yes, when the commodity is booming, kind of like I think this could apply to a lot of the gold miners. Everybody's trying to buy gold right now, right? So that's driving the commodity up and it's bringing the gold miners up. But if all of a sudden everyone just starts dumping gold, they're going to get crushed. And it's kind of what I didn't like is that management doesn't have any control over the commodity, right? So when you're a lumber company, oil, yeah, I think oil, the companies have to take what the commodity price gives them, I guess. Does that make sense? So I didn't like that they don't have control over it like, a Costco does their stores and their products. And well, I guess they don't have any product. They do have a product. Their company's the product. I think you get what I'm saying, like with McDonald's, right? Well, maybe even then they're affected by the price of beef, but not as completely dependent on it. So if you go to Home Depot, do you really care if a 2x4 is from Boise Cascade or Georgia Pacific or Louisiana? I don't care, Alrighty. Both SCHD and the team that USC is, right, are both for protection, the Trojans, which is a shout out if first person gets a gold star who owns Trojans. I think it's I think it's a foreign company. Giordano's, are they publicly traded, Patel? I don't know. Oh, what's up? Dude, if you're out on the town right now, why are you stopping? Enjoy the town on a Sunday night. I don't know what you're doing, but Doc. Sorry, Doc. I wanted to acknowledge you and I put you on the screen and I already clicked on to Steve and I was like, wait, I didn't even say anything to Doc. So there you are. By the way, if you guys want a tip, a speaking tip, something I've been thinking about, revisiting some of my notes, you want to try and use less crutch words. Like, things like that. It's much better to go silent for a minute because silence is a vacuum, right? When you're silent, it draws attention. That is something I will be working on. Dan, there he is, Dan Weston. I agree. But what are you going to do? Against covered call ETFs. Well, yeah, I guess so. We see, I did it. I just did it. Some habits are hard to break. So, hey, you guys know my thoughts. We won't spend too much time on it. Dolphins did better today. Happy Sunday to you too, Adam from Las Vegas. We'll be coming out to Las Vegas, and if you got the newsletter, that's going to be partly funded by Lockheed Martin. Because my daughter wants to see Panic at the Disco coming out of retirement, and I want to take her to both shows. Good God, is this When We Were Young festival expensive? But you know what? That's the price. You pay it or you don't. I'm going to buy a memory for my daughter, my family. We're actually looking at the second night getting her VIP because I talked to a friend who was there a couple years ago. He said there was about 80,000 people there. And I was like, oh no, I'm going to pay all this money for her to see. And she's going to be at the back because she's thinking, well, I just want to see Panic at the Disco and they're the headliner. So I'll just go right before they come on. And I was like, I don't think you can do that, hon. Like, you're going to be all the way in the back watching them on TV. So anyway, I sold Lockheed Martin. We're going to put that money back. We're putting it on our tab, right? It's been an expensive year. We've pulled money out of our taxable overflow account. And I know some people are like, you never sell investments. But is it okay if after we've contributed and maxed out our 401k, the Roth, the HSA, put money into the 529 account, 2 of them every month, money into an emergency fund and a travel fund, and then still, after paying bills and food and entertainment, had money left over to put into our taxable, right? Yeah, it's not fun selling, but again, would I rather have those 10 shares of Lockheed Martin for another year or two or make this memory? So it's kind of an interesting and easy take. They are. I did hear they're moving out to Arlington Heights, so that should be interesting. You get hungry for Portillos, and that's the thing. Portillos has such a brand that it's very unique, and I think they can expand. Like the person I was talking about, Stephen Farrington, said, the worry is that, well, it works in Chicago, but is it going to be able to work outside of Chicago? But one of the test markets is Chicago because it's so diverse. There's such a wide swath of different kinds of people in Chicago that if it works in Chicago, it's thought it can work elsewhere, right? So yeah, Portillo's, Hugo's, Geno's East. I've never been to Hugo's, so I can't, I don't know what might not still be open. Yeah, Church and Dwight. Thank you, Steve. That's we asked who owns Trojan, and it is Church and Dwight, right? They also own Arm & Hammer, I think. I feel like there's a joke there with Arm & Hammer and Trojan. Come on. We're making that vacuum work now, aren't we? Oh, what's up? G'day, Sam. This is Sam Clark. I don't even know what. Let me think. Join us all the way from Kiwi land down there in New Zealand. Actually, I can tie it in because Toby Keith, not Toby Keith, Tobias Carlisle, Toby Carlisle from the Acquirers podcast is from Australia. Toby Carlisle's from Australia, so it's terrible, right? It's almost as bad as when this guy does a Chicago accent. He's like, hey, I'm going to buy, come on, $6 a share for Portillos. You ain't even going to get yourself a Maxwell Street Polish at Portillos. You want to get yourself a Maxwell Street Polish with extra grilled onions. You got to have the mustard on there. You want to get some fries. Maybe you get a little cheese cup. You're going to be at $10, $12, $13 anyway. You can get 2 shares of owning the company instead of your Maxwell Street Polish. Well, you're going to crap it out anyway. You might as well keep the shares of Portillos in your brokerage account there when you go watch the Bears out there in Arlington Heights. Yes. Can you imagine somebody that just turned on and they're like, is this person okay? They were just trying to talk like an Australian and now they're doing a crazy Chicago accent. But hey. Brett, any guesses on SCHD dividend coming up month end? I don't know. No, Craig plays that game. He tries to run all the calculations to figure the next one. And I'm like, when I get it, I'll tell you what it is and I'll be happy with it. You know, as long as it doesn't get cut or go to zero, whatever. So if you guys want to look up any stocks, we'll do news here in a minute, right? We're already 19 minutes in. Do you happen to know when I open my kiddos, almost an adult account, can they make trades, buy and sell on their own? So Doc, it depends. From what I understand, with my 2 daughters, I have custodial accounts and I have custodial accounts for them. So 21 years old, they can't do anything in it. They buy their own. They turn 21, it's attached to them through their social. They'll take ownership of it automatically. But if they have earned income, then you can open up a Roth IRA. Not until they have earned income, you can't open up a Roth. So if you're talking about a custodial account, they can't do it on their own if they're under the age of 21. Again, maybe different in your state. At least in my state, that's what it is. But that it's through Schwab. They can only do it if I do it. We can do it together. So, Lisa, I was working today. I saw your stream pop up. What do I call you? The Queen of Stream or something like that? You're a Kiwi living in Australia. Al's beef is good. We're getting very Chicago centric here, but I think Portillos is very interesting. And, I actually, on a lighter note, or maybe not light, I don't know. I think investing should also be fun. I would enjoy for almost every day I see a Portillos. So I would enjoy knowing that people are in there spending money. And, if it sounds at all interesting for you, do yourself a favor, listen to that episode linked below for the Acquirers podcast. Steve, look at Pine. That one I think sounds familiar. Is that Alpine Resorts? Oh, I don't know if I could keep it up, Bill, doing the whole accent in the whole show in the Chicago accent. That's some good dandelion tea. You go out your front room, you got some of my neighbors, they're jagoffs, they got dandelions all over the front lawn. Apparently, it's a gold mine. Who knew you can pick them dandelions, put it in a little diaper, put it in a bag, and you can sell it at the Whole Foods or wherever you're going to get this dandelion tea. It's freaking dandelions. Smells like dandelions, and it's supposed to be good for you. So there you go. You want a business idea, you go get yourself some dandelions, grind them up, and make some tea. All right, enough of that. Adam wants to know thoughts on, is that PayPal? Yeah, we can look. PayPal for Adam. It's like I'm taking an order at Portillos. Guessing SCHD. Oh, and that's the thing that the guy said. It's like tell you the 10-minute joke, right? Give you the punchline later. He did say that the C in SCHD stands for cult. And again, Craig and I, like we talked about, nobody, some YouTubers, I think, sold it that way, but we don't have our whole life savings and everything, so help us God, in SCHD. That would be a cult. But putting 4, 5, 6, 10% of your portfolio in SCHD, I don't see the problem with it. So, but hey, you know what? Everybody's got an opinion, right? Oh, and by the way, right, since I sold Lockheed Martin, you guys want to keep tabs on that. Probably going to go right back up into the 600s. So I would expect that tomorrow they're probably going to have breaking news that they've made contact with an alien race, and they're going to build their ships here on Earth, and they also cured cancer, right? So everybody, Lockheed Martin, you're cleared for takeoff. But again, I only had 10 shares, so yeah, next 25 cents could be. Hey, it'll be what it'll be, and I'll just be fine with that. Steve, it could be, but I think that's just for a custodial account. So my daughter, in a few weeks, I can't believe it, will be 18. And I think she could just open up her own brokerage account. But I think for a custodial account is what the rub is there. Comparison with ADC and ARC. Well, there are two different types of companies, Sam, right? Agree Realty is retail triple net lease. That's where the tenants pay for upkeep, maintenance, property taxes, and then Ares Capital is just loaning out money to. You know what? Did I share that? I wonder if I could do this. I wonder if this will work. This is I shared this in the newsletter, but for any of you watching, I'm going to put this in I don't know if you can copy and paste, but this is an article on that this author, he said, dare I say it, Ares Capital is about to cut its dividend. Yeah, he didn't mention the spillover of $1.29 a share, but it's interesting, Robert Berezins. So you might want to read that. So anyway, I can gift 5 free articles a month. So that's one of the ones I gifted. But anyway, it's a BDC, business development company, and they're loaning out money to lower middle market companies, right? So they're apples to oranges comparison. There's the but I have both. Personally, for me, and as I've shared, I think that Ares Capital is a great income factory stock. Even if they cut the dividend 20, 30%, it's still going to be over 5% yield. If that happens, we'll see. Stock price would probably fall, which will also help push it up a little bit more when that share price falls. But it may not happen. We don't know what the future holds. So almost time for news. A couple more minutes. But yeah, so Sam, I'd say educate yourself a little more. And I as far as a comparison, it's not like comparing Agree Realty to Realty Income to Triple N REIT and EPRT. You know what I'm saying? Or you could probably do Main Street Capital, Blue Owl, right? Is the one Ryan holds, and Ares. So you could do something like that. Yeah, how does everybody? That's a good question. Something that's gone up but is an amazing company, hold or sell. Well, I think Warren Buffett would say, why would you want to sell an amazing company? They're very hard to find. And David Gardner, I think his book comes out this week called Rule Breaker Investing. I know he's been pimping it a lot on his podcast, but that's one of David Gardner, co-founder of the Motley Fools things, is that he says too many people sell their winners when the whole thing he's done is to keep adding to the winners. You don't want to cut the winners. Keep adding to the winners. And again, Peter Lynch, right? He warned against people cutting the flowers and watering the weeds, which is what we do when we say, oh, wow, this position has gone down. I'm going to buy more, but I'm going to take some profit on some of this stock that's done very well. So DN, I would say if it is an amazing company, why do you want to sell it? They just keep going up and up and up until they stop being amazing. Buy low, sell never. There you go. Adam answered the question for me already. Look at this. Janice is drinking green tea with blueberries. Nice. Just sold him on dandelions. Kind of a mafia intimidation thing. I mean, nice to hear, Bill. It's really not that bad, but it is weird because I'm thinking these dandelions are freaking everywhere. Now I'm drinking them in my tea. But Craig has talked about having his own YouTube channel. So he's got quite a following. That is good. Thank you for sharing that, Mark. I do appreciate. Yes, a BDC is going to do better when interest rates go up and REITs when interest rates go down. And that's one of the concerns that I've thought about with Ares. And yeah, I've been adding more, but we'll see. And if it does go down, then I'll keep buying more. So oh, John, what? I've been only talking about this for a while now. Videos, newsletters. The long story. Okay, long story short, and then we'll do news, John. Why I have been selling Realty Income is that, well, first of all, they're huge. I don't think they can grow as much as some of the smaller REITs like Agree Realty or Vici Properties. They are having trouble moving the needle, making deals that will move the needle because of their size. They're kind of remind me of the Blob. I think that they're making acquisitions that are not going to be as accretive as some other earlier deals were. So I just think they're going to have trouble growing, but they're going to be fine. The dividend is not going to be in jeopardy or in danger, but I do expect them to underperform and keep underperforming both Agree Realty and VG Properties is the one I wanted to say. And I think a lot of people are thinking I'm saying it's like dangerous or a bad investment to buy Realty Income. Clearly not. With interest rates coming down, I think all the REITs are going to be that rising tide is going to lift all of the REIT boats. I just feel more comfortable. Plus, I think they had a little bit of financial shenanigans with the way that they calculated their first year nominal WACC, the weighted average cost of capital, right? So that initial amount to make an investment look better than it really is. And yeah, I didn't like it. Kind of rubbed me the wrong way. That was the last straw. But again, Realty Income is a perfectly fine investment. It's not going anywhere. There's nothing wrong with it. The only thing that is wrong is I think that they're going to have trouble growing compared to other REITs. That's it. That's all I'm saying. That's the only reason I'm selling. So, all right, now let's do news and then I'll jump back in. So, and what do I think of Bill? We've talked about, I know I said news, right? We've talked about Alexandria real estate. Should do better with rates coming down. I know they're in the life sciences, so a little bit of a different flavor. You know, I would be worried. And I think a lot of people worry because it shows that they have office space, but it's very specific, dedicated life science, like laboratories. But I think it's still considered office space. If that's wrong, somebody let me know about that. But all right, here we go. Get that frog out of your throat. And we're going to go to good old Simplasaf. Why doesn't Kevin do the news anymore? Why doesn't Kevin do the news? What do we do in other news first? Then I'll look up your stocks. I usually have this queued up with where we were at. I think we left off on... Sorry if this is making you dizzy. We left off last week after did that. It was, oh yeah, Verizon. Now I'm remembering. Here we go. This is new news. New news you can use, I hope. They reaffirmed the safety score of, this is Simply Safe Dividends, by the way. Shout out to Brian Bollinger and his crew. Brian Bollinger and his merry band of men, where there's only a few, and a woman there. Merry band of people. I don't know. They give their own opinion on a company, and it's called an outlook, and they give their own safety score. So it's not an algorithm doing that. And then they will reaffirm, they'll relook at all the data, what they said, and if they agree still and make changes. So, and I didn't read this one. I usually like to, but Goldman's partnership bolsters T. Rowe's price push into alternatives. And that's interesting. I did hear on the compound, Jenny Johnson, I think, was on TCAP, the Compound and Friends, talking about alternative investments. Blockchain is going to be a popular alternative investment. So T. Rowe could be undervalued and interesting. Let me know if you're buying T. Rowe and why. Here we go. Speaking of Realty Income, sky high dividend raise, 0.2%. They raised that dividend, I think, every quarter since they IPO'd in 1994, and also Agree Realty, interestingly enough, IPO'd in 1994. Both companies have been around for many, many years before that. But there you go. Toward the lower end of the reasonably valued range. They refreshed their outlook on Iron Mountain, ticker IRM. 60 borderline safe score. Yeah, that price has gone up a lot. Good for you if you bought that. Yeah, United Health. Here you go. The Medicare stars rating, right? Positive for them. So the Medicare Advantage ratings lift. That should be good for United Health. So again, like I've said, Adam, you've been buying United Health. You know, some people think you're crapping on it. I was like, look, I'm personally not going to buy it for many reasons, but I hope people make money that keep buying it. So it has had a very favorable move in you guys' direction. Nice job. NJR, New Jersey something or other, gas utility, raised the dividend 5.6%, their 30th consecutive annual increase. So good for them. Does anyone here own NJR? I'd be surprised. Novo's cutting jobs. Looks like they're having trouble competing against Eli Lilly, but they reaffirmed their safety score of 90, very safe. And the little blurb there that I'll read to you says Novo Nordisk tempers guidance and cuts jobs, but dividend remains sound. So there you go. Very fast dividend growth too. 20% dividend raise. Wonder if they regret that huge dividend raise. Kind of like, oh, what company just did that? Some company raised the dividend. Oh, UPS, right? I think they raised the dividend 50%. Now they're probably like, regret that. What is this? They refreshed the outlook. So they went through and rewrote it again. They're right up on J&J. 99 dividend safety score. Fantastic. That's one I sold. Remember, it worked out for PepsiCo, but we had to buy our family car. I sold 120 some shares of J&J around 147. Yeah. What are you going to do? And then lastly, good old Abe. There he is. Lincoln National. Stronger capital ratio and steadier earnings mix bolster Lincoln's dividend outlook. So upgrade from 40 unsafe to 50 borderline safe. Steve, you wanted to look at Pine, which is indeed Alpine Income Property Trust. Steve, are you chasing yield? Because that yield is sky high above the 5-year average. Market is telling us something. And let's see if we can tell from the fundamentals. But again, like with Portillos, the fundamentals, just looking at these numbers, don't always tell you the whole story. So this week, you may see that I'm buying. Oh, sorry. That I saw this huge 81% 5-year CAGR, but yeah, from 19 to 20, they just went up a lot. But yes, they've slowed the dividend growth on Alpine, ticker PINE. Could be undervalued. The price to adjusted funds from operations is below the 5-year average and the dividend yield is above. So you really have to know why. Let's see. Their AFFO payout ratio holding steady. Free cash flow. I think, yes, they're a REIT. And I think a lot of people might be souring on almost $20 of negative free cash flow expected. That's pretty big. We'd need to know why. What is going on with that? AFFO per share, though, is kind of stalled out. Sales growth still good. Oh, they're buying back shares. Wow, that's pretty unique for a REIT as their sales keep going up to the right. You know what I didn't do? Oh, I did do that. This is Alpine. Yeah, so let's see. It just, you know what, Steve? We'd need to know why the market doesn't like it. I don't think just from these numbers, it looks like the dividend is in any danger of being cut. Yeah, that's a really low ICR. For those of you that don't know, the interest coverage ratio, the ICR, is how many dollars of operating income or EBIT, right? Earnings before interest and taxes, does a company have to cover every $1 of interest on the debt? The higher, the better. So they're cutting it kind of thin there the last few years with only 98 cents of operating income to cover every $1 of interest on the debt. So that's probably why the debt has been rising too. Maybe they're borrowing to do that. So Steve, 50 borderline safe score. I don't know if you're chasing that dividend yield, and then I don't know. I know PayPal, they don't pay a dividend, but does anyone think I still use PayPal. I don't think PayPal is going anywhere. Weren't they spun out of eBay? Yeah, earnings per share. We'll just look real quick for you, Adam. Strong earnings per share. It's sales growth slowing. Do you guys think PayPal can be replaced? Yeah, look at the sales. You like seeing that. Shares outstanding. They're buying almost under 1 billion shares. Yeah, it just looks like a solid company. And virtually no net debt, a lot of ICR. and it's 66 bucks toward the lower end of the middle of the 52-week range. So it looks fine to me. But yeah, what I'd love to know your guys' thoughts on PayPal. That's why we're here. Share ideas, talk about ideas. You get to hear about dandelion tea. Dandelion. My family just got home. I don't think does anything about his portfolio quietly. Hey, my wife says I'm a loud talker, so sometimes I wonder, you got to turn the volume down on your phone. Waiting for the turnaround in T row. Michael Swami is. Hello. Hello. Welcome home. Congratulations on another job well done. Eddie, you better not be late again, Eddie, for cry eye. You sold Nike. Whoa, Nike and Rollins. I'd like to know your thoughts on that. And okay, you're all over the place. Rollins, I wouldn't have sold unless, I'm looking to buy. But you bought United Health, Zoetis, and Google. Eddie, Nike could be a slow go. I've been questioning my position in it. Have I made a mistake? Is it going to take a long time for this to show any? So if there's a really good opportunity, I may just sell Nike to put it into that. But I still like the idea and the company. Rollins, fantastic. We're always going to need pest control. I've been selling but buying United Health could be good. Again, hey, if the investigations that turn out to be nothing burgers, and it could be a great time to buy. But, I think there's a lot of things that people are getting excited about, but could be good. Adam's buying. Zoetis, my thoughts on them. I've already got a lot of shares in it, and I may add more. And Google, I'm sour on. I didn't buy it because I felt I had enough exposure in the S&P 500. And one moment stuck out that I almost did buy several shares was when Ari on the deep end talked about he's buying Google, and he was teasing Ryan saying like, what would it take to make you buy Google? And I remember looking, it was in the low 160s. And I thought, it's probably cheap enough. But then again, I looked and I said, well, it dominates the S&P 500 and it's already making up a big part of my portfolio through that. So I didn't, but probably should have. Michael's also waiting for UNH. Hey, it may have already started to turn. So, all right. You didn't have to contribute as much or at all. A horrible car payment. Yeah. So we paid cash for the car. And geez, cars are expensive. I couldn't believe it. Apparently, as I learned, I'm living in, I don't know, 1999 or something. Because I thought, we'll get a nice, maybe 3, 4, 5-year-old, not a lot of miles, SUV. We got a Volkswagen Atlas. I said to my wife, so he says to the wife, what's it going to be? About 20 grand? And she laughed. She's like, what do you think? 20 grand? She said, we can get a piece of junk for 20 grand. I'm like, what? Yeah. Oh, yeah. So, yeah. Anyway, long story short, we got the 2021 VW Atlas. When we got it, I think it had just under 50,000 miles on it. One owner, no accidents, very good condition, and taxes, fees out the door. I think it cost us about 33,000. No, 34, but we got a 5-year extended warranty on it from the dealership. So if anything breaks on it that we didn't drive into a brick wall, it's a $50 deductible and they'll replace it. So yeah, anything like the computer goes out, window motors, anything like that. So that bumped up the price a little bit, but normal wear and tear that are not tires, if that makes sense. Started buying Vici and Triple N. Hey, a little bit at a time. I like Vici, obviously, and Triple N is solid. We were talking about PayPal. Is Venmo taking over? I don't know. I still use PayPal, but we'll see. I don't know. I wouldn't be as excited as I am about Portillos because around this area, Anytime you're at lunch, you drive by a Portillos, you're going to see a line of cars and all kinds of people going in and out of Portillos, getting themselves their sandwiches and their beefs. You know, you get the juice on the beef, all that stuff. So, my blue heaven. You shouldn't stand so close to the. Why? You can melt all this stuff. Great movie with Steve Martin. I haven't seen that movie in a long time. 3K on air conditioning. And that's the thing. We're planning on keeping this car for a long time. So we made one payment on it before I got everything settled and did the buy it off. But the interest on it, I figured, was a little over $200 of interest in a month, I think. So yeah, we bought it cash, paid off the rest. We one interest payment on it. It's externally managed REIT. It's owned by CTO. I did not know that. Thank you for the color, Mark. Brad Thomas, the REIT expert, thinks it's a potentially good acquisition for O or ADC. I could see O buying that, but not ADC because, you know, we talked with Joey Agree, and he's laser focused on fungible squares, fungible rectangles that are in retail, laser focused on retail. Remember, I asked him about industrial. Nope. Car wash. He said, nope. Car wash can never be anything other than, what did he call it? Something like a 60-foot or 100, however long, 100-foot tube, right? So that's all it's ever going to be. Nothing you can do with a car wash other than it ever being a car wash. What are you doing? Buy it when the tech blows up or goes. So that's PayPal. I'm guessing you're saying, right, Janice? Or no, Google. I probably should have got into it. Why? YouTube. YouTube is the #1 streaming platform, I believe, in the world. So, yeah, I don't know. It's another opportunity. Oh, somebody asked, what was the guy in the thumbnail sucking the thumb? I don't know. Me? That's why. And if you get the newsletter, I shared that I have $1,900 just sitting there, and I was like, I should just buy a share. David Gardner talked about this. Also, so did. Yeah, it was David Gardner, I think, talking about buying at all-time highs, why companies doing something right when it's at an all-time high. And it usually works out when you buy at all-time highs. But I should have bought Google probably, you know. Ian Lopik was buying Google. He's smart enough, so. Just the dang thing shot up. Went on. I think, yeah, some people said it's no good. We've talked about this. Some people said but we've had no problems with it. My wife loves driving it. It's a little too much electronics for my liking. ASTS. What is ASTS? And I did see, Steve, you wanted to know CTO safety score. CTO Realty is 50, borderline safe, but it has a yield of 9.2%. And it's apparently very undervalued by about $1.50, according to Simply Safe. And then, what were we looking up? Or I'm looking up. You can't see it. Oh, ASTS. I don't know what that is. AST Space Mobile. Know nothing about it. And good luck. They have never made money. They have crazy sales growth, but that just all negative margins. So this is not for me. Good luck, Alan. I wish you the best with it. And for this one, I would miss out on. But hey, what's up? I see my son. ¿Qué pasó, mijo? Sometimes I speak to my cat in Spanish and he doesn't respond. You know, we had a thunderstorm here the other night, and this guy right over there, he won't come and see me right now. He hides by the toilet when he gets really scared. That's like DEFCON 2 is behind the toilet. DEFCON 1 is up in the leather couch in the back. He found a space. He's like, screw you guys. But he was behind and I just told the toilet, and I told my kids, it's like, you know, you should go in there and just try explaining to him, right? Try explaining to him how the molecules interact with each other in the atmosphere, and that creates thunder. Fight his fear with information and knowledge. And my one daughter said, "It's dumb. He won't understand." And I said, "Have you ever tried?" "No, you haven't. Try and explain to Louis how thunder works at the molecular level." Anyway, uh, grinding to retire. Sorry, what's up, man? Yeah, I don't think I've seen you before. Has anyone invested or reviewed? What is graphite? What is graphene? Do explain. Buy up ASML. Company is still undervalued. Yeah, ASML is a company that has a big moat because they make the machines that make all the chips, right? So, yeah, they have a dividend safety score of 82, very safe, and they look to be almost undervalued. From what I know, very, very safe company, and just very quick. Here, I'll show you. Why am I? They say on YouTube, show, don't tell. So that's just what I'm going to do. I'm going to show you ASML instead of telling you, my friend. Safety score of 80. This is Simply Safe Dividends. 9.91, right? Shows it's reasonably valued according to them. Dividend growth slowed down a little bit now, 5%, but 25% 10-year CAGR is huge. It's in euros. You get paid, or that's the dividend, right? So foreign. Is this an ADR? It's envy. I don't know if this is an ADR, if that tells me. Someone let us know if ASML is an ADR, an American Depository Receipt. But it's almost undervalued. I know some people in the dividend growth community have been looking at buying it. Free cash flow payout ratio, super low, 14%. It's a solid company. Tons of free cash flow per share. This is why it's an $800 stock. Some people might think that's an expensive price for a stock, but it's all relative because $23.50 of free cash flow per share, and there's only 392 million shares outstanding to spread that out over. But solid company. Like, this is what you want. Sales going up and to the right, and then shares coming down. Free cash flow per share, it looks like it's stalled a little bit. So I think some people are thinking it might have been priced to perfection. I don't know. Yeah, margins are all great. Just a very solid company. No net debt. Tons of interest. There you go. There's the difference. ASML has $70 of operating income to cover to just easily cover every $1 of interest on their debt. So it's negligible at that point. Just a very well-run company. And do they have their credit rating up there? No credit rating on it. Why? Because they have no net debt. They probably have very little reason to borrow money and need that rating, I would guess. Yeah, have at it, Adam. Thank you for stopping by. Bill, you bought Avista and Black Hills Corp. I think Black Hills, right? That's a dividend king. So it is. That kind of turns me off, and I don't know if that turns any of you guys off. The last ADR I held might have been Nestle or Neo. It's going back a while, but I don't. It's probably stupid. Do you guys ever feel like this? That my thought is when I have an ADR, I truly don't own a piece of the business, because unless I have it wrong, a bank in the United States will acquire those shares on a foreign exchange, and then they will allow you to buy a receipt for ownership in those shares. So the bank owns those shares. The financial institution owns the shares of ASML. Yes, you get the dividends, right? They just pass the dividends right through to you, but you also have to pay a very, very small fee for that privilege. So to me, I don't, and it could be dumb, right? That could be a dumb thing, but that's what turns me off about ADRs is I really want to feel like I own a piece of the company and not just a receipt for the company that I can't ever trade in for the actual stock. Yeah, thanks for breaking that down, Charles. RCAT. What is RCAT? I love it. This has oddly enough been a show with some non-dividend paying stocks and Red Cat Holdings, electronic equipment, drones. Hey, there you go. It's based in San Juan. It's another company that's never made money, but does that mean it's bad? No, it just means that they've never made money right now. Oh, I'm laughing. They have negative $887 of interest, a coverage ratio on their debt. So, yeah, Hood is good. I talked about it with Craig before we recorded, and I didn't like them. I thought they were going to go away. They didn't have customer service. Craig had said they took the brunt when I don't remember what meme stock it was, but when they paused trading, they froze trading on it. I didn't like that, but apparently other companies did too. So I think Hood will be fine, I guess. Hey, people have now grown up with it. It's entrenched. They're trying to expand into new opportunities. I don't like it. The tokenization of, right? It was SpaceX and OpenAI. Again, talk about ADRs. It's like an ADR. Robinhood will buy a stake, a private equity stake in, for example, OpenAI, and then they will allow you to trade based on that ownership stake, their ownership stake in it. But if it's a private company, you don't know any of the financials. You don't know. Oh, that was the thing about Portillos too. So I'm jumping all over the place, but I love this saying, and I know there's a few of you watching. I want to get this out there because I found a site, and I'm too short to put it up, but I'm 6'4". You know what I mean? I'm not too short. It is a website called insiderarbitrage.com. And he had said how what catches his eye is when a small cap company buys, when a small cap company's CFO or general counsel will buy shares, because especially the CFO knows where all the bodies are buried. So if you see the CFO buying stock with their own money, like they're going to their checking account and buying shares in the company that they are CFO for, it's way more bullish than the CEO, because the CEO has to make people believe in the company. And at times they can drink their own Kool-Aid and it doesn't always work out. But I thought that was very interesting. And indeed, Portillo's general counsel and their CFO have been buying shares in the company. So GME, yeah, GameStop with Hood, that's what we were talking about. But anyway, I think Steve, I was saying with like RCAT, that's something to think about. And, I got my thumb sucking account. I'm going to read the annual report. So sometime this week, I may just buy 100 shares of Portillo's and just sit on it for 10 years. Because again, right? I'm intimately, believe me, I'm intimately familiar with the brand. I've met Dick Portillo. That doesn't make it a good investment, and he sold it. But again, you can go back to the beginning for what we talked about. Dumb money. Yeah, that might be it. And maybe Robinhood will start paying a dividend one day. But this is what, Bill. You feel you don't own an ADR, weird dividend payments. Yeah, they really can. And it's funny when you look at some of the dividend history of the ADRs, it's just because of the FX conversion, the foreign exchange. It's just all over the place and it's harder to track. But again, personal preference. Again, it doesn't mean it's a bad investment, but I don't know. That's just I like to feel I own a piece of the business. Don't you? I don't know. But then again, hey, somebody called me, whatever, in a cult, in the SCHD cult. But are you really? Come on. Come on, if you own, if SCHD makes up 6% of your portfolio, are you really in a cult? Maybe. But hey, that's what people are here for. They can criticize those of us using our government names while they hide behind a veil of anonymity and an avatar that they just made up on the fly. So, hey, but you know what? You know a lot about me, and you know I love because I'm a kid of the 80s. Yeah. And Pee Wee Herman left us 2 years ago, Paul Ruman. So, oh, last one, Charles. Yes, I did think of that because I have owned Canadian stocks and I would own Canadian stocks again. No problem with that because you do feel that you own a part of the business like I do. So, SCHC is a third of your Roth. But again, that's up to everybody. If you want it to be 100% of your portfolio, I wouldn't advise against it. But it's your life and it's your world, boss. So again, be smart. Just at least know what you own. We'll end with Peter Lynch saying, know what you own and why you own it. And you know what? I'm going to get out of here. We got another week coming. Dude, thank you. Thanks to all of you for hanging out. I really do appreciate it. This hour just freaking flies by so quick. And until I get a copyright strike and they tell me I can't use this, I'm going to keep using. I think I found a loophole. I love this ending music. It was always so sad to see Pee Wee go, but I knew he was going to be back again next week. So everybody, thanks you. Thanks me. Thanks so much for coming. And I will see you right here next week. Thank you.